Today we're just taking a look at two-day reversals. During this decline, one very notable two-day reversal is right here. The pattern occurs when you have a very strong day, and then it closes near the high, and then the next day it opens at the high, but closes well below it. Actually, in an ideal situation, we would want a two-day reversal to look nearly identical. We'd want each day's trading range to be close to identical. So, for instance, even though this one isn't at a peak or bottom, this is a two-day reversal right here. We had a strong up day, we have a down day after it, and the two candles look almost identical. We would expect this to go down afterwards. Basically, the direction that the market's going to go in is going to be the direction of the second day. So this candle was red. We expect the market to go down. It does. Just like this one, that candle is red. We expect the market to go down. It was. Now, in a few recent days, we've seen failed two-day reversals. This right here was a failed two-day reversal. The pattern occurred, but then the next day we had an up day, another up day. And then here, the two-day reversal failed. Actually, especially today. We had an attempt yesterday at a bearish reversal. Didn't really work out that well. And then today, with this pattern actually right here, this is a one-day pattern, just Japanese candlestick charting. And this one is called a hammer. It kind of looks like a hammer. You can grab the handle at the bottom and, I don't know, hit something with it. That is traditionally a bullish pattern. And actually, even today, just to watch how much the market completely rejected the sellers, it's definitely bullish. It only took about 2 hours before buyers stepped in the market. We had one last test of support, and then in the last hour, buyers stepped in, threw the price straight up. Now, unfortunately, this pattern isn't too well documented, so we're only left really to subjective evidence by Martin Pring and empirical evidence of me trading it. I found trading it that it's actually very dependable. I keep trying to find a study on it, but I really can't find any at this point. But if I find any, I'll try to get the statistics for you. But you could basically use this as a lens. When patterns start to fail, like when we saw Gilead and we said it was going up, when patterns start to fail, like this one did at the beginning of June, you generally expect that there's something wrong going on in the market. So we had a successful pattern here, a successful pattern here, a failed pattern here, which gave us one warning, and an absolutely just atrocious failure right here. So, therefore, I think that for the next few days, or maybe the next 2 weeks, we might see a little upswing in the market. Especially, let's take a look at some studies and see what momentum indicators say about it. Yep, this one says that there's definitely room in the market to go up, and according to Money Flow Index, we have a bottom and it's going up, making a divergence with the lower lows. We might look for an upswing here. Thanks for watching. If you have any comments, put it in the comment box, please.